Hi everyone, it's Chat About with another video. Today I'm going to be talking about Pfizer, major player in the pharmaceutical industry, and of course a major story in the last few years as the biggest producer of the vaccines during the pandemic. Excellent business to own over the last year or so, up 45%. Over the medium term it's not been so good, that's up 45% even after a 15.5% decline from its December highs. Still pays a healthy dividend, has some growth prospects and returns a lot of money to shareholders. I want to figure out, is this company undervalued at current prices, is it below fair value, and is it a buy today? As Pfizer is a pretty mature company, I thought I'd start off with the financial strength, the balance sheet, and looking at its profitability. Cash debt ratio of 0.77 is definitely imperfect. We'd like this to be at least above 1. However, for a pharmaceutical company, this isn't that bad. They often carry much more debt. They're very acquisitive companies. I don't think this is that bad. 0.77 cash debt ratio, that's completely reasonable in my opinion. In combination with a good debt to EBITDA ratio of 1.39 and good interest coverage means this is just not overly of concern to me. Equity to assets of 0.42 and debt to equity of 0.51 are just okay. Not awful for the industry, not great either. The company has been given an Altman score of 3.44, indicating this company is not in financial distress and is not at immediate risk of financial default. So the combination of all these means I'm pretty comfortable with this balance sheet. I'm comfortable investing here. The margins here are excellent. Profitability wise, this company is really strong. Excellent for the pharmaceutical industry and strong for any industry really. 28.68% net margin, 25.8% operating margin, both very strong. These are not even that good historically for Pfizer, so profitability is definitely a strong point for this business. Return on equity percentage is 29.01, which is very strong, much higher than the 10 to 15%, maybe 20% I would expect for a company of this scale in this industry. Return on assets percentage of 11.28, also excellent for this industry and above what I would expect here. So overall, I'm pretty happy with this business. I'll talk about the revenue growth and EBITDA growth in a minute because they're all over the place. But overall, profitability wise, this company is doing really well at the minute and capitalising on the near-term mass expansion of revenue. Now I just want to go over a few bits to talk about where Pfizer is going, the company's strategy in the near term, and how it did in its most recent quarter. Pfizer anticipates it's going to continue to be a growth company from 2025 to 2030. By growth company, I don't think it means it's going to be Snowflake or Shopify, but by mature companies growing 10-15% a year will be absolutely excellent for Pfizer. They think they've got durable pandemic revenues, they like their internal pipeline, and they're going to be investing a lot in business development using this as part of this capital allocation strategy. The next part of Pfizer's strategy is to leverage its strong balance sheet and their anticipated near-term big free cash flow gains to allow the company to continue growing its dividend and pursuing new business development. They believe they have a disciplined asset evaluation criteria, meaning that there are compounds that are in therapeutic areas. They want to maximise their profitability, allow breakthrough assets that could be significantly better options for patients, and also get a lot of revenue and profits for the business, and they want to remain a partner of choice for smaller biopharma companies like BioNTech for the vaccination program. These are all fairly reasonable goals in my opinion. I think are sensible capital allocation strategies. A big part of Pfizer's plan going forward is of course their mRNA vaccines. They're continuing to strengthen from the gains they've got in the pandemic. They want to grow the prophylactic vaccines used for flu and shingles and other infectious diseases, particularly viral ones. They want to pursue additional therapeutic areas with the strongest benefits to risk. So looking at rare diseases where of course they can charge a lot of money. Looking at oncology. So they want to leverage the previous cancer vaccine experience, and they want to explore opportunities in larger indicators like immunotolerance, which AbbVie has quite cornered at the minute, and internal medicine. These are all sensible things to be aiming at in my opinion, and they're balancing benefit and risk quite well. Looking at the most recent quarter here, not surprisingly, everything is up, primarily driven by the vaccine. Revenue's up 106%. Excluding the vaccine, down 2%, so not pretty much flat year over year. Diluted earnings per share up 152%. All excellent numbers here, and Pfizer's really capitalising on the massive influx of revenue by driving a lot to the bottom line. Looking at how Pfizer's full year earnings performed versus the guidance, they did really well. Results, revenue right in the middle of that range, the guidance range. Adjusted diluted earnings per share above that guidance range by a significant amount, about 10%. Everything's okay here. Met or exceeded all components of the 2021 financial guidance. Again, massively influenced by the pandemic and the mRNA vaccine, but Pfizer's executed really well and I'm quite impressed. Surprisingly, looking at the guidance for the financial year 2022, they're increasing everything across the board. Revenues between 98 billion to 102 billion. That's roughly 24% increase. And everything is up here. I mean, adjusted diluted earnings per share, I thought this would be roughly flat. They're expecting a 47% growth here, so right in the middle of that range would be 47% growth. 635 to 655 compared to, what was it, 440 in the previous one. These are absolutely really bullish indicators and shows that they think the mRNA vaccine is going to continue to be necessary for very least this year, if not further years to come. Looking at Pfizer's capital allocation framework, of course, they're going to be prioritising the 6 core therapeutic areas and spending a lot on R&D. They're going to be doing some bolt-on mergers and acquisitions and, again, strategic partnerships with late-stage assets, maybe smaller companies like BioNTech again. I think the company are great capital allocators. Perhaps bearish that the company has repurchased authorization but are now not buying. But I think this is sensible capital management. Companies grew nearly 50% this year. They don't want to buy any more shares because perhaps they think it's slightly frothy, or they think it's fair value and they think maybe you shouldn't be buying at fair value. Some people will see this as bearish. I'm completely fine with this. They continue to pay out dividends at a great rate. Dividends is great here at 3.1%. Paid out for 83 years consecutively, so 332 consecutive quarters, 12 years of consecutive dividend increases. They've paid $86.7 billion in cash dividends to shareholders in the last 11 years. That's about what revenue is today. Pretty safe in my books. Can't ask for more than 332 consecutive quarters of payments. As safe as houses as far as I'm concerned. Looking at some basic valuation metrics and ratios, everything here looks pretty good as far as my opinion. It's actually looking pretty cheap. The first one we'll jump to is, of course, the price-to-earnings ratio. Price-to-earnings ratio of 15 and a forward PE of just 9, above well below the S&P 500 averages. S&P 500 PE is around 22, I think, right now. Well below the S&P averages, indicates that the growth of this company is not priced in and the company is significantly undervalued based on its earnings. Perhaps because the market thinks that the earnings will not be kept up in the future, but as we've seen, Pfizer's guidance is massively disagreeing with that. Price to cash flow ratio only 10 is again some of the lowest you'll see for this industry. Pretty low for Pfizer's history, and that is what we're seeing here. That all these metrics, as you can see on the right hand side, are pretty low for Pfizer's history. And as far as basic valuation metrics are concerned, this is a reasonable buying opportunity for Pfizer. The next step in my evaluation is doing a discounted cash flow analysis to work out intrinsic valuation and therefore a fair value that I will be willing to pay with a decent margin of safety. DCF here is obviously very subjective. Pfizer had massive earnings growth this year, and whether this can be maintained or increased very much depends on your outlook towards Pfizer's mRNA vaccines. They're of course not going to grow earnings per share at 230% and free cash flow 174%, but 5, perhaps 10% growth is not completely unreasonable, again, if you believe in Pfizer's mRNA vaccine's future. I believe that as we move from a pandemic to an endemic, Pfizer's mRNA treatments will continue to see demand, perhaps lower than currently, but they will be attempting to create new mRNA vaccines for other infectious diseases during this time. I think Pfizer can manage to build upon these recent successes, and as does the management, as we've seen. If Pfizer continues to grow earnings per share and free cash flow at 5% a year, then these models will be accurate, so take that with a pinch of salt depending on your outlook. On a free cash flow basis, the company is currently significantly undervalued with a fair value of $75, roughly 50% upside when using a discount rate of 8% for the long-term returns of the stock market and a 5% free cash flow growth rate. On an earnings per share basis, it's about fair value. 5% minus 5% margin of safety, fair value of $49 compared to a stock price right now of $51. Again, I call this fair value when it's that close. If you believe in Pfizer's long-term prospects, this represents a reasonable opportunity to purchase at around fair value or below if you're looking at the free cash flow metrics. So to summarise, I'm definitely considering Pfizer as an investment. I believe in the future of mRNA vaccines. I believe in the management of this company. I think mRNA vaccines will be used for treatment of a variety of diseases, and as the pandemic moves towards an endemic, the vaccines will continue to be used. I like Pfizer's pipeline also. I'm not completely sold on the balance sheet, but I do like the profitability metrics, and I think they will be able to maintain this to some extent going forward. I don't think the company is dirt cheap, but it is below fair value right now if you believe they can continue to grow at 5% a year, which I do. So for me, it is right at the top of my watch list. I'll be digging deeper into the pipeline in the future, but I like the dividend, I like the capital allocation, I like the management, I like the future prospects. So it's ticking a lot of boxes for me as far as that's concerned. And I have been looking for a pharma company to add to my list. Recently analysed AbbVie and I wasn't completely satisfied with the price. I think Pfizer is a much more attractive price. So again, with that said, none of this is financial advice. So if you want some proper financial advice, you should go to a registered financial advisor and of course do your own research. So if you could like and subscribe the videos if you're enjoying the content, that would be great. See you again.